Quick trade recap. Alright, today was beautiful. Beautiful Monday. Beautiful sales. We're going to jump right into it. So, coming into midnight open, we print this new week opening gap. Now, with new week opening gaps, I always keep in my mind that they don't always get filled on the first day of the week. They quite commonly do get filled on the Tuesday or the Wednesday. That's just from data. But seeing as my bias was already bullish, had this zone marked out here. I was quite, to an extent, comfortable with targeting. I say that was my target, but I was comfortable with targeting in that direction anyway, as price could have easily, in a different scenario, consolidated and then coming on to the Tuesday, then filled, and then maybe if high time frame bias is bearish, pushed lower. So we get to the DXY. We've broke bullish. We got this gap down here, so that's where we open and basically run into. Now this low here, coming off Asia lows that I have marked, sort of like an SMT. Basically pretty much what it is. The lows don't get swept on DXY, but the highs on EU get swept. Right, so there's your SMT divergence. Boom. Now, at this time, 7:40, we're looking for a rejection candle. Which you get at 8 a.m. close. Because I did make a note of a few things to talk through anyway, but likewise we will get into this. So 8 a.m. close is here. 8 a.m. close is here. Now I ended up entering a little bit early. I ended up entering a little bit early on the 1 minute because I wasn't sure if price was going to retrace all the way up. Now, if we're thinking about 8 a.m. close, we've got the hourly wick rejection, right? Nice wick rejection. We've got strong displacement, right? This is all strong displacement. All that now I need is a retrace. Now we don't always have to go for the retrace. We can enter off 1 minute break and retest, like come retrace. I know I said retest, but I didn't really mean that. But I just mean, for 1 minute retrace, break, retrace. I mean, the break actually didn't happen until this candle, all in all, and then you get the retrace up to the break line into this gap. I'm in a little push away now. If I could go back in time, I would have entered a little bit earlier, but that's not the biggest deal in the world. Okay. Ignoring that, bias is bearish, obviously, on EU. We've opened higher, obviously, NWOG. New week opening gap here below. We've filled this gap as well, like now. During this trade, I closed out at roughly here, right? I closed out there. Reason one, and we're going to write this down, is so point for improvement, right, will be holding trades till full TP hits. Okay, now moving to break even is okay. No, that's okay, but not all of it. Not all the time you want to do it because price can retrace back up and basically take you out. Okay, so hold trades till full TP hits. Now, why wasn't I fully comfortable with doing this? Well, one reason being high risk, but at the same time, I didn't really care. Like when I entered this, I entered two scaling positions. This one which lost, didn't care, and then this one which I held for a long time. Now watching this live, I thought, oh, like it's gonna run through my stop. I had actually used more risk on this scaled in position than this trade here, which realistically it should be equal or less, never more. That makes no sense really. Only reason you do that is because of greed. So yeah, I end up then closing this trade at just a quick W in green, which more or less basically got back the profit that I lost on this. Another thing that I mentioned as well was the retrace. You don't, me personally, from what I've seen today as well, like scaling is something I'm still trying to practice doing, but I don't want to just be entering off like a 5 minute displacement like this. I don't want to enter like that. I want to enter price comes down, maybe retraces, takes out a high, comes up, 1 minute break, and then back down. I don't want to just be like, you can, don't get me wrong, but just from what I've seen today, that's just my opinion. My opinion, never financial advice. So, improvement 1, hold trades till full TP hits. Why not? We'll just say scaled in positions, risk to match original position. Right, so as I close this out now, what I should have done was actually leave partials running, but I took the full position out because obviously I had high risk, and then re-entered here, stop loss there, and then TP down where the final TP of this one originally was. Now, thing is, watching your trades live, you just sort of, I don't know what it is really. You just don't. It's the fear, I guess. I guess it's just the fear. Now, obviously, you got high risk on the table. You don't want to lose, but with time, you just don't care. With time, you genuinely just don't care. Now, I'm not someone that's really used to high risk, but I'm definitely getting better. I mean, today I didn't really care. I watched price come all the way up, nearly hit my TP. If it hit this, it nearly hit SL. If it hit SL there, that would have cancelled out the win that I made on this move. So that just shows you, like, you know what I mean. To an extent, I don't care, which is better than caring, because you don't want to make emotional decisions. It's got to be all logical and with reason. So yeah, that's that really. Kind of gone off on a tangent, but I think the main point is with this setup, and also going forward because it is recurring, is hold trades to your full TP. Now, if you are going to scale in, move the original, de-risk on your original size. Maybe use half risk, and then let's say you're risking 2% on the full trade. Okay, there's 2%. Maybe drop that down to 1% and enter a 1% position halfway down here. Do you know what I mean? I mean, that sounded smarter in my head than what it's actually said now, because now I'm thinking about it. If it takes that out, it might just be smart to put that at break even. It doesn't matter as long as you're reducing and controlling your risk exposure. That's like the key bit. You want to control your risk exposure. Now, I had good draw time, and also it did. Like, let's have a look. Roughly entered 8 o'clock. Final TP Asia low they got hit at basically 1. 8, 9, 10, 11, 12, 1. Nearly a 5-hour trade now. I've actually started checking these setups and I've realised that it can take 4 hours to hit. Now this is definitely one of the longer ones, Monday being slightly lower volume, but better volume than what I seen last week anyway at certain days. But I think understanding that if a trade does go for 3-4 hours and it's not hit TP, it's okay. Like, let the market do its thing and let it take its time. I could have definitely left runners down to this NWOG as well, which would have absolutely like passed my account, which is a little bit frustrating. But end of the day, I've profited quite nicely, so there's no point to beat myself up about it. We've got one holding trades till full TP hits, high risk, scaled in positions. I'll put the risk to match original position. Number 3. Also, we hit Asia highs on DXY first. Like, oh, this is so beautiful. At like 12:05. And at 12:50, or like coming into 1 o'clock is when we hit Asia lows. So, where would 12:05 have been? That's probably where I would have actually closed, potentially. Because it hit my main draw was this, but then if I'm going to use my brain, I'm going to leave runners up to the NWOG and close the majority of my position out here. That's what and how I should have played the trade out. So let's go back to this. We'll do trade management. This is all sort of links into trade management anyway, and it's not the first time I've had to pick up on these things, but this is like a real good opportunity where I can see it where it's all sort of played out, and I can capitalize on this, and I can, like I've done in the past, take these improvements on. Now, I mean, my entry could have been a little bit sooner, but when the move's that big, the entry sort of becomes insignificant. Trade management, leave runners to key draws on liquidity, which in this example was the NWOG. Oh, I'll just put general, like manage risk, manage total risk exposure, be patient with letting trades run for hours. Also, don't be afraid to lose. I don't think I was necessarily afraid to lose, but it ties back a little bit with just knowing the risk that I had on the table. So, all in all, this all links to trade management. All of this links to trade management, and that's basically where I'm at in my trading journey, is just improving trade management, because having high risk, low R wins is like unstable. I can't lie. Like, you do need good R trades like this to play out. Like, and that's only a 3R. But like I say, scaling in is where you were rewarded. Like, I seen this come into my direction and I closed because I was like, oh, closing green. I don't have to worry in case it retraces up. But if I had risked 0.25% and like had runners all the way into this MWAG, I would have been sweet. Because if I would have lost, oh, whatever, it's a little bite out of the profit that I made for the total day, I'm still up. But if I win, the reward is huge. It's a great risk to reward in that, but I put too much risk on this, meaning if I was to lose, I'm at break even for the day. And if I was to win, well then I'm flying, But that's not how you shouldn't have to put your psychology under that much sort of stress. So that's what I'm saying. Control your risk, manage your risk, your total risk exposure, and it's a lot easier on your psychology to actually be a better trader. So these are the things we will be taking into tomorrow. Okay, so if I do take a setup, these will be in the front of my mind. No messing about. But all in all, a good trade. Considering I only took one setup last week, and it wasn't a good setup, I just entered. It was a loss. It was just over like a 1.5% loss. I come back this week and made 2%, so I'm happy. Happy as Larry, but there's more we can do, and you don't want to stay on the same funded for too long. So yeah, we'll call that a wrap.